Welcome back. Well, I'm sitting down with someone who's right at the top of the deals table. Vishal Kampani of JM Financial is with me here right now. We'll talk everything macros, markets, deals, not just the India-US deal, but of course also all the deals which we're seeing in the capital markets. And of course, we'll sort of wind down with a view on JM Financial as a stock, as a company, which of course has done very well as well. Vishal, thank you very much.
Thank you.
This is day one of the conference.
Absolutely, and we're very excited.
Yeah. What do you expect to sort of, you think will be the dominant theme here this time?
So I think there are lots of themes. One is India very clearly is one of the dominant growth engines in the world. And investors are very interested to hear what's happening in India. And, you know, if you have a longer term horizon, which matters, 3 to 5 years, there is no question you won't spend time on India and understand the growth prospects here. And also this time, in the last 5 years, we've seen almost every sector having outperformance. It's not about making a bet on IT services or banking. We've seen growth across sectors. So it makes it a very interesting and exciting market.
You know, last 1 year has kind of been strange because there's a bull market in so many pockets of the market, so many stocks, but no bull market as far as the index is concerned. Is that the right way to characterize it? It doesn't feel like the market is going bonkers with gains at an index level. But stocks?
Yeah, I think, see, the disappointment has been in earnings growth. I think the expectations last year were around maybe a 15-16% kind of earnings growth. And the number is closer to 8 or 9%. Right? So there has been a bit of a disappointment. And that is a primary reason, I think, why you've seen FPI selling. Right? So it's more of earnings-driven selling. At the same time, you've had massive buying from mutual funds, all led by retail inflows through SIPs into funds, which has been able to sort of sustain the index where it is. So in fact, without that, I mean, markets could have been lower this year. But again, as I said, the word is horizon, right? What's your horizon? If you're really a long-term investor, which retail in India is proving to be a smart investor using SIPs. Taking a long-term view on equities, your returns will be very good as long as the economy is growing at 6-7%.
You think we should, that statement, which is retail has been the smart money, we should preface that statement with the question, only time will tell, or no?
Of course, no.
Need.
I mean, time will tell, but, when you see, do you see any big macro risk in India, right? No, it's hard to tell. I mean, look at corporate balance sheets, right? Completely delevered. Right? You look at India government, right? I mean, you don't see any macro risk. There's stability. Foreign exchange reserves are almost 700 billion, right? Consumer, there are parts of, the sector in consumer which is slowing down. But it's also slowing down because of competitive intensity, right? Yep. So I think, leverage in the retail or the individual segment is not that high. So there is no real macro risk that we worry about, right? Our banks are strong, our NBFCs are strong. So the financing, the credit side is strong. So where is the downside going to come from, right? And full credit to the government. We did not do any kind of, overspending during COVID. No kind of distribution of money at the center level, right? So I think full credit, and that's why you're seeing the strong macro balance sheet.
But earnings growth has to pick up, right? I think this will be the third year where nominal growth is under 10%. So that's got to pick up. And hopefully that will, with all what has happened.
Yeah, I think, so somewhere you've also seen a bit of a reset post-COVID. You've seen many sectors fly during COVID and do very well. And you're seeing a bit of that reset in terms of earnings. Maybe seasonality is coming back, right? So many of these factors are coming together, and therefore you've seen that over the last 6 quarters or so, you've seen a bit of a decline in earnings. But I think as a house, we are quite positive. I think next year, which is 26-27, you should be seeing close to 14 to 16% growth in earnings, which I think will able to give you better returns from the Nifty as well as some of the smaller indexes over the next 18 months.
Vishal, you guys have been part of some of the largest issuances, IPOs, secondaries, blocks, I mean, everything basically, right? The level of activity is unprecedented. Now, the argument sometimes which is made, and I think it's right, that it's still the question, what came first, demand or supply? All the supply would not come if there was not enough demand to absorb it. But at some level, you've got to ask the question whether this is almost an en masse transfer of ownership to retail in that sense, right? And all this selling. How do you think about it?
Yeah, I would think that today India is in a place where we have a lot of different pools of capital operating at the same time. right? So where is this surge of IPO activity coming from? It's largely coming from the investments of private equity.
Yep.
You see, last 6-7 years, we've got almost $350-400 billion of private equity inflow into the country. Assuming these smart investors want to grow their money at 15%, right? Over the next 5 to 7 years, that's almost $800 billion to $1 trillion of exit value. If these companies have been able to grow at 15%, right? So, and a significant portion of that, maybe 25 to 30%, right, will find exits through the capital markets. Some part of that will be a private equity to private equity transfer.
Sure.
You've been seeing that, right? You've seen some home finance companies which have changed hands within the PE universe itself, right? And another one-third could be strategic M&A.
Sure.
So there are lots of pools of capital.
Although strategic M&A has been kind of, it's not that large, right?
No, it won't, because the multiples are very high
Correct.
now, right? So people would prefer to invest in their own capacity than buying. Having said that, there's almost $50 billion worth of deals that have happened year to date. So deals are happening.
So if you divide these three, look at these three categories of, I mean, the way to monetize private equity, early investors, etc. The top one, the biggest one is IPOs.
Of course. Right now is IPOs, but you know, I'll tell you what happens is when you return capital back to these investors, they will come back with more.
Absolutely.
So they will invest again in younger enterprises, newer companies, and that will fuel another growth, right, for the IPOs and the secondary markets over the next 5 to 7 years.
But you just said that strategic M&A is not happening as a way to exit because multiples are too high. That multiple, I mean, all this stuff is being bought by retail at those multiples at the end of the day.
No, I think what's happened is a couple of things. Indian corporates have become careful in terms of doing M&A. You see, the returns from M&A generally in the last 15 years have not been great. So Indian corporates who are buying also have high multiples. So that kind of defeats the argument. I mean, if I want to buy a company at a higher multiple, if I'm trading at a higher multiple, I have the currency to pay for it, right? But people are saying on the absolute side, if I'm paying 25 times earnings for something, am I really going to make those returns? So which is a very conservative and smart way of looking at it. Having said that, there are lots of sectors where you can find value, right? I mean, you've seen banking. I mean, I was amazed to see that, RBL raised more equity, right, than their net worth, and from a, UAE player. So, which is a very interesting transaction. And I think it redefines the way we look at our banking sector in India. This is actually control transfer of a bank to a foreign bank, which has not happened.
60%?
Yes,
No, 60%.
and an open offer.
Yeah, an open offer. So you sit down next opposite lots of promoters and private equity, etc., who want exits. Just give us a sense of how those conversations are going right now. I mean, is there willingness? I mean, who's pushing? First of all, our valuations, on average, I know it's very difficult to make generalizations. Some are high, some actually leave a lot on the table.
Yes.
But are you generally okay, all right? And how do those conversations go?
I would think it's more sector specific. I would think in the new age space, maybe people have to be a bit careful. What I fundamentally don't understand sometimes is that stocks trade up a lot higher post IPO, and they weren't necessarily priced very well during the IPO. So secondary market investors have to be careful. Buying stocks which have done extremely well post IPO when the IPO itself wasn't considered cheap. That's number one. But generally, if you see, again, domestic mutual funds, I mean, I tell you, they've been very smart about making investments. I mean, they're not paying up for anything. They're being careful. They're looking at very conservative ratios like PE multiples as well. Not just getting carried away with EV to EBITDA multiples and adjusted EBITDA multiples. And so generally, I think the entry price, again, from a 2 to 3 year horizon is not expensive.
Do you think that this phenomenon of companies doing very well immediately post-listing is also because a lot of the anchor, etc., is locked in? I mean, all that supply is out of the market,
absolutely.
Right?
Good point. Yeah, absolutely. So there's no supply.
There is no supply.
Yeah, so you'll really see how some of these gains which you see post-IPO, how they play out post a 30-day, 90-day, and a 6-month lockup.
Yeah,
see, one thing I'll tell you, one has to understand that in a promoter-led company, you're not going to see the promoter sell his stake within 5 years. So as I said, 350, 400 billion private equity invested. That's almost 800 billion to $1 trillion of exits. These exits have to happen. If they're listed companies, strategic sales are complicated. They're easier in privately held businesses. So the float that will come to the market in some of these companies is going to be very large.
Sure.
Right? And that can dampen stock price movement for a very long time. Right? You can see 2 years or 3 years of prices being almost flat. Even though results are great and earnings are great, just because you have 70% of a company that's up for sale.
I know you can't sort of write down this as a rule for everything out there, but generally speaking, would you say, and I'm asking this and you're a banker and a deal maker, for viewers who are watching retail, etc., it's a good idea to not generalization overall, but as a mental makeup. Give it time. I mean, new listings. Give it time. I mean, once these lock-ins, etc.
Absolutely. Please give it time. Don't rush in day one to buy new listings. Just hold off. And retail investors in India are way better off investing with some of the marquee mutual funds in the country, and they will give way better long-term risk-adjusted returns than trying to do it yourself.
That's a very safe statement, Vishal.
No, but that's true. I mean, end of the day, India has growth. Yeah, but India can have potential risk. You're not seeing it today.
Yeah.
Right? And if you have smart managers who are managing your money, why not just allocate it to them?
And the pipeline itself, Vishal, I just want to ask, is it as huge, as large, as strong?
This is our strongest and biggest pipeline in the history of the firm. It's unbelievable.
So how many deals are you doing a month?
120,000 crores worth of filed IPOs.
Yeah.
So which is a big number.
And how many is JM doing every month? I mean,
our market share is between 20 and 25% of the market. So if we have close to, say, 120,000 crores of filing, the market potentially has between 3 to 4 lakh crores worth of transactions. So to give you some figures, year to date, 1,52,000 crores has been raised.
IPOs.
And last year was 1,54,000 crores, 1,55,000 crores. So we will beat last year. There is a chance that next year we could double this number.
Wow.
Yeah, okay. Because there are some very large IPOs which could come next year.
I mean, the big one, of course, is potentially NSE.
Absolutely. I mean, that would be a very large and a very exciting IPO.
Yeah.
I think it'll be the most exciting IPO.
Yeah. Vishal, we're going to continue this conversation here, but for our viewers who are watching, I'd just like to toss it back to the studio. Nigel, Surabhi, back to you guys while I continue this chat here.
Okay, absolutely, Prashant. I know it's a very interesting conversation that you've been in the midst of. So very, very interesting. Vishal Kampani saying that retail investors need to be careful. Let these new listings settle in the secondary market, because the truth many a times, is revealed only after those anchor lock-ins end, when those big investors, their lock-in periods are over. So we'll see some words of caution coming in over there from Vishal Kampani.